Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap Session for Tuesday, January the 31st, 2017. It is the last day of the trading month and one day before the FOMC meeting. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market macro to micro, take a look at the structure of the market, drill down to our trade levels, our targets, and then we create our hypotheses. We generally create four main hypotheses in order to have a plan in place. We do not know what the market's going to do. We just create a plan based on what our anticipation of what the market does. Then we look to see what the market is actually doing and then find the plan that best suits what the market is doing and then execute on that plan. Therefore, we do not need to make a plan on the fly. We know exactly what we're looking for, and know exactly what we want to do. This is a subscription room, so if you're interested in checking out, please send an email to quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. Also, please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. My sound is working, yes or no? Fred, it is? Okay. Fred said it wasn't working. Okay, so let's take a look at the news. We had news this morning out of EBITDA. We had GDP came out better than expected. RMPI month over month came out better than expected. IPPI month over month came out just under what expected. And employment cost index out of the U.S. came out just slightly better than expected. 9 o'clock, in about 15 minutes, we've got S&P CS composite HPI year over year, expected to be 5. 9:45, we've got Chicago PMI, but the big one will be consumer confidence, CB consumer confidence at 10 o'clock. And then tomorrow, we've got all the big news. Tomorrow is going to be a big day. We've got ADP non-farm payroll. We've got manufacturing PMI. We've got construction spending. We've got crude inventory. We've got total sales. And, of course, the big one being 2 o'clock, we've got the FOMC statement and the federal fund rate. So tomorrow should be a big day. Okay, so let's take a look at what happened yesterday. Yesterday we were open up inside the gap. We broke down into the Tuesday day, came right back into balance at the 64.50 level, right into the MC VPOC. Buyers stepped in and basically just started, grinding their way back up towards the open. Didn't quite get to the open. Created a bit of a double distribution day, but it was a grind. I mean, this was a nice move. We did get short on this move, but this was just a choppy grind back up, and pretty tough to trade. Didn't put a lot of trades on yesterday. Did put a lot of trades on last night though. So let's take a look at the macro and micro, as I always like to start my day off that way. I use a simple candlestick chart. I use a 9 EMA, 20 SMA. I'm looking for slope and separation for the strength of the trend, where the trend is being challenged or violated, any candlestick patterns or chart patterns that I can see. Beautiful multi-year upward trend, challenged at the end of 15, beginning of 16, took it back, had a rising 3 pattern, put in the new all-time high. We still have an unadjusted all-time high between the Globex and the RTH session. Our Globex high is 99.50. Our RTH high is 96.50. This should be taken out at some point in time. We just don't know when. But we do have slope and separation back to the upside. We are nowhere near challenging the trend, so the trend is still up on the monthly. On the weekly, so far we've had an inside week. We had 2 inside weeks and then the breakout, and now we're getting another inside week. A move down to 22.55.50 will start to challenge the trend, but for all purposes, right now we are still in a trend. We got good slope, good separation on the weekly. On the daily, we have this RTH island top, the 3-day island top. It doesn't show it here because this is full session, but you see it on the composite. And we've come down, we're below the 9, we're testing the 20, so we are challenging the trend on the daily. You want to watch this 2270. The 2270, 2269.50 area is the microcomposite value area high of the balance area that we came back into yesterday and tried to break out overnight. And we want to watch that because if we get back inside and move down to the 64.50, would probably be in order. And this time, I think we'll test the lower side of that balance. But we've got that naked VPOC down at the 2256.50 area, and we could see that. But the trend itself is being challenged on the daily. On the intraday, you can see we do have a downward trend. We have a gap. We have a naked cross all the way up at 2288.75, but we have created this strong downward trend, good slope, good separation, failure to get above the 9. Watch the 76.75 level for a possible change of the trend, challenge of the trend on the 4-hour. On the 1-hour, you can see we've had a downward trend for the last couple sessions. We are chopping now. We're in consolidation mode, but we are still below the 9 and the 20. We just have to see if we get a continuation or continue to consolidate down here for a move to either change the trend to the upside or get the continuation pattern. Going to the 30-minute, you can see basically the same thing as the 1 hour, and then going down to the 15-minute, you can see that we're starting to get a possible continuation pattern. Failed to get above the 20 here, back below the 9. We didn't quite take out this naked cross here at 75.25, so you might want to mark that down. If you hold the 70 area, that would be my major target for the day up there. And then going to the 5-minute, you can see that again we're chopping, but we're challenging the trend to the downside right now, and possibly going to see a trend change. So as we move down in the time frames, we really get into chop in this area. Taking a look at the structure of the market, you can see that there's our island top, 3-day island top, a gap down. We came all the way back into balance and tested the 64.75, put in the low of yesterday at 63.25. Buyers stepped in, rotated back up, and we closed at 76.25. Currently right now we're trading 70.75. Our value area high is that 70. So watch that. If we get below that, we're likely to come down here again into the 64, 65 area and possibly come down to that 57.50, but I'm watching the 56. The value area low is the 53.50 with the CHVN here at 52.50. Very strong, kurtosis on the composite and the microcomposite. pretty good buying tail here, so it's tough to say, but I don't think that they'll find the same buyers they found yesterday down here at 64. Caveat is that we're coming into the Fed meeting, so we're likely to get a move early in the day and then go sideways. But we've got this wick right here, and one of my main hypotheses is getting stuck in this wick and chopping between the 76 and the 64 area as we battle and chop inside of this wick. So there's a possibility that we're going to get stuck in the wick today. So taking a look at the overnight. Overnight session is net negative. We chopped around, then we broke down, chopped down in that 69, 68 area around the microcomposite VPOC, which is at 70, and then we tried to get back and take back the open. We failed, and we come back down, and we're chopping around here. Pretty much a triple distribution overnight. Our overnight high is 76.75, so just above the close from yesterday. Our overnight low is 68. Our VPOC just shifted a few minutes ago. Our VPOC is at 71, so just above the VPOC from yesterday of 70. We have an LVN here at 72. And we have an LVN here at 74.75. And that's pretty much the information that I can glean from there. So putting in our trade levels, our daily ATR, I had estimated it yesterday when Carlo and I were talking about it, that it would come out at 16. It did come out at 16. So our 20-period daily ATR is 16 points. So off of the overnight high of 2276.75, our downside daily ATR target is down here at the 2260.75, and our daily upside ATR target is up here at 84. It is the last day of the month, and our critical mass is all the way down here at 2256.75. How do I calculate that? The month open was 2240.75. We have 1 day left of trading at a daily full session ATR of 16 points. So 2240.75 plus 16 gives us a monthly critical mass of 56.75, one tick above that naked VPOC at 56.50. And if we get below critical mass, we could, if we get inside a critical mass, we could see a bigger move down. I'd be targeting the 52.50. Going to be watching the 63.25 as a major trade level. If we come down into the microcomposite VPOC, I'm not going to use the value area low. I'm going to use the LVN here at 66.50. I'm going to use the LVN here at 74. So just slightly off of the value area, targeting the 75.75, really the open at 76.25, but I'm going to front run it. And the overnight high, of course, at 76. And then we have this LVN here at 77.25. And then above that, I'm going to be targeting the 84, well, the range high at 81.25, and then the 84. There's a CLVN at 84.25, and then of course the 87 area, and then above that we're back into balance up here in the island, up at the microcomposite 3-day VPOC at the 89 level. We got a naked close and a naked VPOC up there. But we do have Fed Day, so I'm expecting that we're going to get a tighter range today. So my main hypothesis, we're going to open an auction in range. I'm looking for a push up into the 74 to 76 area, 77 area, finding responsive sellers, and then rotating us back down towards the 64.75 and chopping, and basically spending most of the day inside of this wick. My secondary hypothesis is a open auction in range, a move down to the 64, maybe even down to the 60.75, finding responsive buyers down here and rotating us back up and chopping around between 77 and 64, and getting a balancing day and getting stuck in the wick. My third hypothesis is an open auction in range, a move down to the 70, leave the overnight low alone, push up, take out the overnight high, come up here and chop in around the 82 to 84 area, and then break up higher and come up into the 89 area and chop around in the balance of the 3-day and close the gap up here. Hypo 4 is an open auction in range, a push up, failure to take out the overnight, the prior day close, and then fail, push down through to the 64 area, chop here, and then break lower and come down into the 56.50, get inside a critical mass and push down into the 52 and close somewhere down here and take a trip through the microcomposite value area, and come into tomorrow down in the 52 area. So those are my 4 main hypotheses. As always, that's going to complete our pre-market session. Well, actually, let's take a quick look at gold, shall we? Gold is still trying to hold above the 1200. We tested below it twice last night, and both times we came back up into the 1206, 1205, 1207 area. I'm watching this area right here at the 1208.50. If we get above the 1208.50, I'm looking for a trip back up into the composite VPOC that goes all the way back to October 2008 and back up into the balance that we just fell out of. If we fail to get above the 08, I'm looking for rotation today and a move down to test the 1200. If 1200 doesn't hold, a move down towards the 94, 95 area, possibly even down to the 86. We either going to stay in the 1200s or we're going to not hold. And if we don't hold the 1200s this time, I'm looking for a bigger move back, and I'm looking for a move down towards the 78 area and down to that next big target below. But as it stands right now, 1200 seems to be holding. Last time we dipped down, we only dipped down to 98 and had a nice $10.7 move up, and we're creating some balance up here. So I'm still looking for continuation higher on gold. So that will complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.